Listen, management fees are not just numbers on a sheet. They are a silent killer of your returns. You pour your capital into a fund expecting to grow your wealth, but every single day, month, and year, a chunk of your hard-earned money vanishes in fees that never deliver real value. And if that doesn't piss you off, it should. Because most investors just accept it like it's part of the deal. It's not. You should hate paying fees that eat away your gains, especially when you don't have a clear line of sight on what those fees actually buy you. Do this. Stop pretending all fees are the same. Management fees in private equity are usually 2% annually, right? Sounds small until you realize it's 2% of your entire committed capital every single year, no matter if the fund is killing it or tanking. That's a guaranteed drag on your returns, even before the fund makes a dime. And you're paying those fees on blind faith, hoping the managers work magic. But many times, they don't. They just keep collecting. Now, let's get real. What can you do about it? First, don't just look at headline numbers. Demand transparency on how fees are structured and charged. Ask them to break down what you're paying for. Is it just salary and office rent, or legit value creation? If you don't get a clear answer, pull back. Your capital deserves better than vague excuses. Next, push hard on fee alignment. If management fees are upfront and fixed, demand compensation models tied to real performance milestones, not just carried interest, which often comes after you're already losing money to those ugly management fees. You should see more of your upside before the managers get paid their cut. Also, don't be shy about negotiating fee terms. This isn't a charity. You're the one taking the risk here, so you get to set the rules. If a fund says, take it or leave it, walk away. There are plenty of managers who understand that fees must be fair and transparent because they want your trust long term. Another move, analyze your portfolio fees overall. Lots of founders and investors don't do this because it's painful. But you need to know exactly what you're paying across your investments. When you do, cut the dead weight. Stop letting fees compound your frustration by eating returns without delivering strategy, insight, or real active value. Here is the brutal truth. Management fees often shield underperformance. They cushion managers from pressure. If you don't cut that cord, you're enabling complacency. You're letting your capital be a paycheck for mediocre operators. That destroys your future. Slow, relentless, and invisible. So, be ruthless. Demand audit rights if necessary. Insist on regular fee reporting and push your network to share fee structures openly. Burn the taboo around fees because in the dark, you lose leverage. In this game, knowledge is survival. The more you understand what's draining your returns, the more power you have to stop the leak. Lastly, consider alternative fee models or co-investments where fees vanish or significantly shrink. Yes, it requires more work from you, more engagement, but isn't that what people with ambition signed up for? To take control, to cut out parasites, to own your destiny? Stop waiting for the free ride in private equity. It doesn't exist. The second you accept fees as a given, you accept lower returns as inevitable. And that's a lie. This is your wake-up call. Fees aren't just a line item. They're your enemy if you don't fight back. Take control, demand real value, and don't settle for less than what your money deserves. Cut the noise, cut the waste, and start treating fees like you treat your capital, with absolute seriousness. Your future gains depend on it. Subscribe to our YouTube channel and open the featured link to discover more.